Ron here from the hit podcast, The Other Side of Wall Street. And if you're like most of us here in the trading community, you no doubt have mentors or experts that you look up to for trading advice and knowledge. Well, how many times have you wished you could just sit down with one of those experts and have a good old one-on-one conversation with no script, no planned questions, just a friendly chat? Well, that's what we're bringing to you here. Each week, we'll visit with a different expert and have an up-close and personal conversation about anything and everything involving trading. So sit back and enjoy as we get to know our special guest. With all the people you deal with, your clients, I assume you find the same thing I do, is that the emotions is what messes them up?
Yeah, absolutely.
How do you go about trying to circumvent that or steer and clear of it, or at least in the right direction? I mean, I found, and the reason I asked that, I found because a lot of times I can talk till I'm blue in the face and it doesn't do any good. I always tell people, I say this on a lot of my interviews that with inevitably, I always say that I feel that being a trader and dealing with your emotions is like being a severe alcoholic and your job every night is a bartender. You're standing there with
Holy smokes!
I mean,
wow, that is powerful. That is home, man.
All night long with pouring all those drinks, buying, and your emotions are telling you, take one, but you can't,
Damn, that is a really, really powerful analogy. And I appreciate you sharing that with me, dude. That's huge. I mean, okay, so let's use that example then for a moment, because what I would have to say inarguably is if you are an alcoholic, and I've been to AA meetings, I'm not an alcoholic, but I've been there to support a friend who is, and I have battled with alcohol in the past, but it's one of those things where, again, mentally, I think we all have the ability to do mentally whatever we want. But in one of the steps of AA is to go back and pour forgiveness and healing into all the pain that you've caused in your life. Mm-hmm. So with the market, if you are in that realm, there are probably people or family members that you may have hurt by trading, right? Let's say you lost a lot of money and you had to cancel the trip to Disney or whatever. It's like going back and first healing any previously bad emotions or negativity that are around trading is a big aspect of it. Some people can't because they got a lot of that negativity from their dad or from their grandparents who might not, or their mom or whomever who might not be alive anymore. So if that's the case, then you have to figure out how to heal yourself first as well. Like what things, what fears, what beliefs do you have about the stock market? Like write them all down. Do you have a belief that the stock market is rigged, right? Do you have a belief that the stock market is only for the rich white man? Do you have a belief that the stock market is only for incredibly smart people with loads of money? Like there are certain beliefs that you may or may not have. Figure out your beliefs and then slowly start rewiring them. And it takes time. You're absolutely right, man. It takes a lot of time, a lot of energy. It's a challenge, but it can be done, right? Beliefs can be changed and rewritten with enough current evidence.
True. The sad thing I see is people like say, I'll put a class on. People, I'll have a room full of 60 people. All have the same information, all hear the same words out of my mouth, all get the same manual. Class is done. We go off. They even have weekly support after that. But a certain percentage will do really well, phenomenally well, and go on and be successful. Another percentage of them will fail miserably, and it's those people that I feel bad for because I'm doing everything the same for everybody, and I'm trying to help everybody, but I kind of feel responsible when some of those people kind of head off in their own direction and fail miserably, lose a lot of money.
Yeah, and like I said, man, sometimes back to the AA thing, there is only enough pain that has to come into that person's life before they change. So if someone is an alcoholic, they can be an alcoholic for a very, very long time and not actually make a change until there is just an insurmountable amount of pain. And that's when they change. And the same thing happened to me in my trading. Like you talked about earlier, most traders end up blowing out their account and losing everything. I mean, that's exactly what I did. I lost it all. Like I was negative $10,000s of dollars because I lost not only my 401k money, but credit cards. I took out cash advances. I did everything to try to throw money at the market to figure it out. And it wasn't until I hit rock bottom, like the bottom of the bottom, where I go, okay, well, there's literally nothing else I can do. what do I figure out? Like when you're at the most amount of pain, that's when I finally like wrote down a rule for the first time ever that I followed, which was simply, if I'm in this trade, I'm going to get out or walk away from my computer for 2 hours. And I'm going to come back and see what it did. So I'm not going to do anything. Once I get into the trade, I'm going to walk away for 2 hours. That was the very first rule that I ever came up with and wrote down and actually followed.
The first step of your trading plan.
First step of the trading plan, dude. And the crazy part is, man, that was the trade that was profitable. That was like the first trade in months, I think, that was profitable because I didn't care anymore. Like I did this part right. The analysis, most traders, and you know this, but most traders do the analysis correct after 3 or 4 hours of education. 3 or 4 hours in, they're pretty much going to get the analysis. There's not really much else you can really do. And there's always some tweaks you can make. But at the end of the day, it's, like you mentioned, mental. It's psychology. So that's when I changed, was when the most amount of pain came into my life. And I think that's when, like you mentioned earlier, that's a lot of people are going to have to, unfortunately, go through that to really make an adjustment.
Well, your story is kind of interesting too, because most people start out on the wrong, what I call the wrong side of the fence if we're dealing with options. Let me clarify that with options. Yeah. So most people, the only thing they know about it is you buy options. So of course, time is your enemy, and all that stuff. In your case, you started out on the right side. You started out selling and then went to buying. So,
you
had it right before you had it wrong.
That's funny, man. You're the first person to mention that, but you're absolutely correct. And the reason is because I got the advice from someone who's actually making money doing it. Mm-hmm. Like Rob, come to find out, makes more money every month trading than he does at work. He works because he's bored, wants to get away from his family a little bit and have good health care. So, he's a supervisor in a call center. I never knew this, but he's probably one of the richest people there, like monetarily, and trades about $300,000, $400,000 account, and just trades the cues. This is all he does, dude. All he does is he buys the cues, and he turns around and sells some out of the money call options. And if he gets called away, he makes 4 or 5% on a $400,000 account, and then just does it again and does it again and just keeps on doing that. So I actually have always understood options, and to make a lot of money, eventually had to go back to that the exact same boring, lame, but easily repeatable strategy where I just took a lot of money and I bought some stock that I liked a lot, and then I held it until it went higher. And I had, stops in place, but understanding that I knew it was a little bit of a longer term approach. I've done really well after that. But like you said, going back to kind of what worked in the beginning, and most people, you're absolutely right, start with buying options because they see how much returns you can make, because it's true.
Not just that, that's how they're marketed. I mean, the brokerage firms don't want you to sell, they want you to buy.
Correct.
You can open a brokerage account anywhere and you can buy options, you can buy all day long till you run out of money. But you try to sell an option, you got to get all kinds of approvals for it because it's more risky. And God, it's way safer than buying options, but they don't want you to do it.
No. Well, why is that? Why do you think they don't want you to?
I don't know. But
you're right.
Yeah. But they make it very difficult for you to do it.
Man. I didn't think about that, because in an IRA, you can buy calls and puts all day long, and you can lose all of your money in an IRA because you buy. But dude, heaven forbid trying to sell a cash secured put.
Yeah.
Or a naked put. It's like, oh, you got to fill out this form. You got to get level 4 approval. You got to call the broker sometimes and do like a verbal test over the phone to make sure you know what you're talking about. Even with a covered call, man, you got to fill out like some type of application. It's kind of crazy.
Yeah, no, they want you to buy. I mean, because it's a retail business. Now that's, they want to sell, they want you to buy.
That is so interesting. I didn't think about that.
We're back to Vegas. We're back to Vegas and the casinos and the gamblers. They want to keep you as a gambler, that they don't want you to walk into the casino and set up your own table in the middle of the floor and start raking in the money.
That is stupidly true. Wow, you're right.
Yeah,
that's wild, man. It's really wild to think of. But no, that's what's really incredible about that is honestly, like the option selling, it's just a math-based system.
Exactly.
It's risk can always be calculated and understood and derived. I don't personally sell naked calls, or at least very, very rarely. I can think of one naked call option I sold, and it was actually because I bought back a long call, and that call was just naked. And I was like, well, it's going to expire anyway, so I'm just going to let it expire worthless. I didn't even get into it by selling a naked call.
Yeah, I don't think I ever sold a naked call.
again, you can. I understand the risk behind it. I get it. But I'm a perma bull by heart because it makes the most sense and the most money. So I do a lot of option selling for puts. I do that all the time. Mm-hmm. That's just kind of one of my things.
Yeah. And plus, even if you want to buy stock, you might as well sell the put to get the stock as opposed to go out and buy the stock.
Bingo. So I know a lot of your listeners are option sellers, man. Do you want me to pull up a trade that I'm setting up right now?
Sure.
So LK, which is Luckin Coffee, that one has been just like an absolute monster in November, December, going from $22 a share to $50 a share, which is 138% return. So, I mean, we're talking a massive, massive move on LK. Well, this virus issue that's coming out right now is affecting a lot of Chinese stocks, but I think that's going to be very, very short term.
Of course.
In fact, I would kind of argue that a lot of this run up from the whole China trade deal, things of that nature, this is very important to know. And again, this is just my personal opinion, but your listeners probably feel the same way. I think Trump's going to get reelected in a landslide if he runs again. If he wants to run again, I think it's an unquestionable, just heroic land. They might not even have a debate. But if that happens, I do think right around the time of election, a deal gets formally 100% ironclad signed, and then the China thing is just going to go absolutely bananas. So that's just, again, all opinion, all conjecture, but based on simple math, here's what I can tell you. A 2250 March put sale for LK. So right now, as of this recording, LK is like at 37 and some change. So we're talking 40% away from the stock price for a month and a half, which is over earnings. Mm-hmm. So we're doing a trade over earnings. Earnings are at the end of February. That option right now is trading at $1.80. $1.80. So that's like a 5% return of the stock's value. Not to even mention your value as a trader, but yeah, it's trading at about $1.80 with 150% implied volatility.
Ooh.
So pretty big on a company that is not massively expensive. $22.50 a share. If you did 10 contracts, you're talking a $22,000 investment, $22,500. Not mind-blowingly expensive. If you put some shares down there, you're also getting put shares near the absolute lowest of the low. Mm-hmm. Some really, really good support on LK is around like 18 and some change. So the risk reward is abundant. And I think, LK is arguably like the Starbucks of China. Mm-hmm. Is it going to go higher in the next year? I think so. And, as long as they continue to increase their profit and their earnings, their gross margins look really okay. They look okay. They're nowhere near at Starbucks standards, but I think that that's going to be a really, really good put sale for the next few days and or weeks to at least keep an eye on.
Now, in your case, once you say you go through that whole exercise, you sell the puts, you do get it put to you. Do you start selling calls against it, or do you sell?
Yeah, man. Yeah. Okay. Yep. So pretty much, again, a lot of times with a particular stock like this, so this is a newer IPO. It is a China-based company, and it hasn't really been around the books that long. So you don't have tons and tons of fundamentals to look over. I will go on an approach like this stock and go, all right, my worst case scenario is this stock hits zero. Because on newer IPOs, that's kind of how I approach my risk. Is I'll say, all right, there's a chance this could go to zero. I probably won't, but I'm going to go ahead and formulate that thesis in my mind that it could. So I'm going to have my absolute risk is from 22 to 0. Well, the crazy part is, so that would be a 1-to-1 risk-reward ratio if it goes from 22 to 44. Well, LK was at 44 literally 2 days ago. So the chance of it doing at least a 1-to-1 risk-reward ratio, if with LK base being at 0, I think is extremely high. But again, then what's the probability that LK is going to go to 0? And I would argue pretty small. So let's say you go from 22 to 9, right? So now we're looking at like $13 of real actual risk. And then could LK go up $13 from 22? And the answer is unequivocally yes. And that's where we are today. And then, of course, if I do get put to shares, which could happen, and if it does, I'm totally fine with it, I will then, like you mentioned, start getting into some collars. So I will be mitigating my downside with puts. So let's say March comes around, I'll be looking at April, May, long puts around 20. And then obviously hoping to wait for LK to bounce. I don't know how much those options would cost for April or May. Let's just say they cost $3. then I would sell at least a 27 or higher call for June or July. So therefore, I make more roughly in covered call premium than I pay for on the puts, but I also have more upside in the equity. So that's usually how I play positions like this.
In most of your trades, do you go longer term as far as what you sell, or do you sell shorter term? And the reason I ask that, because everything I do, I try to do weekly.
Yeah, no, that's a super good question, man. That's a very good question. For me, I normally actually go in the longer term route. I do 98% of my put sales are 2.5 months or less. So if I can find a really, really good like weekly put sale, I definitely will. I'll do that for sure. But normally they're about 2 months away, because I kind of find, and I'm able to judge most charts on, I have a general idea of what it's going to do over the next like 2 months, more than likely. With a week or so, sometimes that's a little bit questionable. Like you could have a random virus like we're having now that just randomly pops up and the market has a big pullback, and you just kind of time it wrong. But one of the very, very key things that I do, Ron, when it comes to selling puts is I wait for a down day.
Right.
And so this is the first put sale on LK. This is the first put sale that I've sold in general since January 13th. Because the market's been straight up rampaging. Exactly. I mean, it's just up and up and up and up and up. And the one that I sold in January was, you're going to like this, maybe, I don't know. But I sold a Tesla, $175 put sale for January 2022.
Oh, that's pretty far out.
So it's forever away. Yeah, it's forever away. This is the one that I actually want to own shares at 175. So I'm not going to do anything with it. I'm just going to let it hang out. And I fully understand that I'm not going to wait 2 years to buy that back. So probably after earnings this week, maybe February, March, I think I sold it for, I'd have to check, but I think I sold it for $16. Give me 9 seconds, I can tell you. January 2022, 175. Sold it for $11.10. So right now it's worth $10.10. So I'm already $1 good. So I'll probably buy this back in 5 or 6 months for, I don't know, $6 and some change. And I mean, I think that's almost a free money trade. As crazy as that sounds. I mean, 175 on Tesla would seem like a bargain to a lot of people now.
Which I don't think you're ever going to see that again myself. But.
Yeah, I don't think so either. And the cool part about option salesmen is I truly do, I love them. It's such an easy strategy to educate traders on, especially if, let's say, Ron, they're 47 and older. They have 50,000 or so in an account, and they work, or they have a thing they do, a hobby, or they want to spend time with their friends and family, and they kind of have their own thing going. It's easier because it doesn't require that much time. Like you could spend an hour during any market open any day of the month and just go hunt for put sales. That's a good one. And then sell them and kind of walk away.
One of the trades that I love doing, which I do quite a bit, is instead of buying stock and selling covered calls, I'll buy a leap and sell weekly calls against that.
Yes.
So
yes.
Which you can get into for less money, and you can still collect the weekly premiums off the calls you sell. And I try to set those up so that I have a built-in profit if my short does get hit and it gets called away, that once I exercise my leap, that I have a built-in profit in the equation. So I can't lose unless the stock goes down, and then that's the same risk you'd have if you own the stock anyway.
Correct. I do like that strategy. It's not one that I've done a whole lot. I usually buy a leap, and then I will, obviously I know you do it too, but I'll try to wait. Like I'll buy the leap, and then hopefully the stock goes higher, and as it hits the resistance, then I'll sell a call against it. But I very rarely will take position to leap and then immediately sell a call against my long call. I've done it in the past, but that was a fun learning lesson. For me, when doing a leap, is I did not know that you didn't automatically get called away on the leap if they were different expirations. So I learned that one the hard way. I had a leap on SPY like 7 years ago, and I had like a call against it, and the call expired in the money. And I was like, all right, cool, whatever. I got a leap, so then I'll just be taking care of that. Nope. So that was good times. But
so yeah. You have a go-to strategy, your favorite strategy, or is it just kind of like pretty diversified and all of it?
That's a good question, man. I think I think my go-to strategy, I'm not going to talk about day trading because I do love the day trade and I do have some strategies with day trading. But I mean, in this kind of realm, the more swing trading, hours to days to weeks kind of thing, really is this one, the one that we're talking about. That's why I just love the fact that you reach out. I do a lot of put sales. I will sell a put, fully okay with owning the shares. And then if I get the shares, then I will turn right around and start selling calls against them and just kind of protect. I will only sell puts on stocks that I like. Right. I understand their fundamentals. I know how they make money, and I just like the company and more or less use the company pretty frequently. Johnson & Johnson was probably an extremely profitable trade in 2019 for me. Getting put shares back at 130 in like September, I believe. And they had earnings and then eventually popped, and then I sold them around 145. But it wasn't the fact that, that's only a $15 profit. I get that. But it's Johnson & Johnson. Right. So I was like, I can go pretty heavy on this one, because I was like, it's going to go up eventually. Plus the technicals looked really good. You had weekly moving averages it was bouncing off of. You have daily, the dividends were coming up. It was just one of those things. I was like, you know what? I can be okay to hold this for a little bit and, play it in a way that I feel comfortable really holding it for a while until it goes higher. So
I do a lot of meetups. You ever heard of meetup.com, meetup groups?
Oh, absolutely. Oh, yeah.
So I do a lot of those, and inevitably when I'm doing one, I'll have somebody come up and show me their portfolio. Here's all the stocks I have in my account. What do you think? And all they've done is buy them, and they're sitting on them. And a lot of times I'll say, I'll just look and I'll say, do you have any idea how much, in my case, weekly, but you can do monthly income you're missing by not selling calls against these positions you have? And they go, well, what do you mean? And then that always gets to the point where they say, yeah, but if you sell a call, then it could get called away from me, and I don't want to sell this. I don't want to get rid of the stock. I want to keep it. And I said, well, don't get so attached. If you sell a call, if it gets called away, turn right around and sell a put. You're always going to be the stock. You love the stock. Just keep playing it that way, in and out, and generate weekly or monthly income every month off to the sitting. Yeah.
But man, you and I are in the exact same mindset with that one. I'll tell you a strategy that I thought of. I have no idea the name of the strategy, and I'm sure millions of other people do it. It just took me 11 years to think of it. Buying, doing the stock and then getting into a bear call spread above it. Mm-hmm. So bear call spread, for those listening, I'm sure you guys all know, but pretty much you're selling a covered call because you have a short call, but then you have a long call above it. So if the stock does rampage and just keeps on going, you actually have the right to buy that stock back at a lower price because you have the long call. Mm-hmm. When you do the bear call spread, you're not going to make nearly as much money as you would make with just the regular old call by itself. But for those of you who are listening and for those of you who've asked Ron that question, if you are freaking out and you want to get the stock and you don't really want to sell it because you love it or you're attached or you think the company's going to go to $1 million, then you can buy a call option above the one that you sell, same expiration, and then if it runs to the moon, awesome, you have a long call. If it doesn't, you still get premium anyway. It's kind of a really cool win-win.
You could actually widen your spread a bit if you wanted to make a little more on it.
Definitely. So you don't even have to do the strike right above it. You could do 3-4 strikes or 4 or 5, whatever it is, but you're absolutely right.
Yeah. Yep.